The big bad wolf, Jerome Powell, came out and gave some remarks that you might want to be aware of. So he gave us some updates on the interest rate hikes or cuts, job employment numbers, how he feels about it, the economy at large. And like I said, if you're an investor, you need to listen to this whole episode. So Newski, let's put them on, bro.
Yeah, so it was a lot of good stuff that came out of it, and it depends on what you think is good, but we're about to share the screen. Everything that you see on the screen will be in the description below. Make sure you like this video to help us out and subscribe to the channel. But let's get into it, man. So Papa Powell came out. He is the big bad wolf right now because he basically was speaking about interest rates, right? And right now, the Fed decided to leave the rates unchanged. But here's something that we're going to talk about. So this is what he said. He said that the actual Fed, right? They underestimated right here. They underestimated the strength of consumers and small business finances. So it says we may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. He said during the whole press conference when talking about his decision about interest rates. Why? What is really going on? So if we look at inflation, Rel, inflation was at a crazy rate earlier. It was like at 9 point something, right? 9.6 in 2022. So what has the Fed been doing since 2022?
Yeah, I mean, it was at 9.06, right? People rounding up to 9.1. And they're saying, all right, inflation is at levels that we haven't seen since, I believe, 1981. And so the Federal Reserve had to come out and raise interest rates because usually when they raise interest rates, it's supposed to slow the economy down. Therefore, inflation could slow down because if the economy is slower, people can't buy products at the rate that they have. So that means that the producers who are putting out the products have to lower prices. And so we're pretty much, or just like not raise it as much as they were. And so pretty much it's slowing the economy down, slowing price raises down. Yep. And there we are. But what happened is it's like he did all that raising of interest rates, but bro, the economy stays strong.
And that's the thing, right? Because like when you think about it, what he wanted to do was he wanted to bring down real estate prices because it was going insane. He was like, yo, let's cool down on the spending because we're spending so much, which is also hurting inflation. And then he's like, I want to cool down the job market, which relates directly to the spending. Because when people have jobs, they spend money. That's essentially what it is. So yes, like what he said was his main thing was inflation, but the rest of everything we talked about was also important. So he succeeded on bringing down inflation. Like it got down to 2.97 in June, and that was like a huge event for everyone. It was like, oh, everyone's super excited, which is great. Don't get me wrong. However, he wasn't that excited about that because he was like, yo, I still want to see inflation at 2 flat. And then the thing is, if you look at it here, after June, July, it went up. August, it went up. And then September, we still saw a little bit of increase, but it went up. So based on all of that is what we need to know, because this is what he's saying now. He's saying that, remember, this is still about the rates. And over here, he's saying, we're not confident that we haven't, and we're not confident that we have. This is talking about, Rel, the whole, are we good with inflation being at 2%? Do you think all the interest rate hikes that you did will get you to that 2%? So he's like, we're not confident. Inflation has been coming down, but it's still running well above our 2% target. A few months of good data are only the beginning of what it would take to build confidence. Now, what do you get out of that situation?
To me, it seems that he's like unsure. Like at the end of the day, we saw improvement, but it's like, did I really get the job done? Because as we've seen the numbers, we got it down to 2.97. But then it spiked back up to 3.7. So it's like, clearly it wasn't quite enough because it's really unstable. And even though I'm on your first link, if you don't mind going back there for a second, as you can see, they said they underestimated the balance sheet strength of households and small businesses. So like kind of getting into that, if you think about it, where we saw real estate hit levels that we have never seen it hit, literally. Like everyone's house got appraised for so much higher than it ever was valued at. Therefore, people's net worth have increased. Therefore, if your net worth has increased, you now have a whole pot of money. It may be unrealized, but listen, house prices are still high, so people's houses are still valued high.
No, bro, talk about the cash out refinance. Talk about just refinance that everyone did to get that net worth.
Nah, literally, like you can do cash out refinances where like if you if your home was originally valued at 200,000 and now it's valued at 400,000 after this real estate boom, yeah, well, that's $200,000 of equity you now just gained, and that's you can take that cash out and use it for whatever you want. So people have this pot of money that they can potentially tap into at any given time. So where if they really went underwater, even if they lost their job, they technically have a pot of money in their housing, right? In their housing that they could tap into to make sure that they stay afloat. And so that's what occurred after this COVID boom. And that's why it's like it's different than other time periods where we had like economic crashes or people anticipated recessions coming, because people lost jobs and also people didn't have this big old burst in their net worth through real estate. This is what makes this time period unique. The fact that everyone has money in their houses, everybody has low interest rates, way lower than what's at market right now, you know, and then also the fact that once again they have jobs.
Yeah, and 80% of people right now have low interest rates lower than 5%, which is insane, right? Because so many people did the refinance, which it makes sense to do. So I don't blame them, but this is the other piece. Right here, everyone thinks that the Fed is done, right? Because remember, the interest rate for the Fed right now is between 5.25 and 5.5. That's the federal fund rate. Now we're thinking that they're done. And the federal fund rate obviously determines the interest rates that you get on housing and the credit cards and any loans you take. That part's clear. But asked if the Fed maintained a bias towards rating, towards hiking rates versus keeping them at the hold, this is what's scary. Powell responded, that's the question we're asking. Should we hike more? Powell's a troll. Like, I think he's the most powerful man on the planet, and he's a troll. He knows what he's doing. I felt like he's like the Avengers person. It's like, oh, like, I'm going to destroy everything, but I will make sure inflation does not go up. And it's like going to be the whole thing where it's like, what did that cost you? Everything. You know what I mean? Like, that's really what it's going to look like. Because the thing is, look at how sick this man looks. This looks terrible, bro. He's like defeated. But to me, I want to make sure I find this exact link or this exact quote. Give me one sec. So right here, right? The issue for the Fed is whether the conditions remain so robust that progress on inflation stalls or even reverses. It has been good, Powell said. We've been achieving progress on inflation in the middle. The question is, how long will it continue? So again, he keeps on talking about this, and he said it is still likely we still need to see slower growth, and this is the biggest part, some softening in the labor market. He will not come out and say it like straight up, but he wants people to get fired. And it's not because he's going to be excited about that, but he wants people to get fired, bro, because when people get fired, they won't have jobs, which means their actual savings will take a hit because now they're going to have to rely on their savings to survive. Now they don't have money coming in all the time, so they're not spending as much. And if this happens, yes, it will cause a terrible market, but people will not spend as much, which means inflation will have to come down, and that could also then affect real estate a little bit. I don't know how that's going to affect the supply, but it definitely will hold down inflation, and that's the biggest scare.
Yeah, it comes back to jobs, man, because like I said, you look at any other time period, there was a loss of jobs that was accompanied with a market, I'm gonna call it opportunity, where we get prices to pull back so that new willing buyers and investors could come in. And that's not just the stock market, that's also the real estate market, or really anything, because everything got inflated during the COVID time period, and it's remained inflated up until this day. Nothing's really come down. There's been no opportunities, and now we have an affordability crisis. This is the lowest affordability in housing, for example, that's ever existed. No one, so no one can afford anything. We literally need people to lose jobs at this point. And it's very sad to say, but we see clearly that's the only cure to making sure that inflation stays down. Because at this rate, y'all, everybody always complains about, everything's so expensive. But you know what? As long as we have jobs, this situation will only get worse. That's just facts.
No, that's a great way to put it. And that's what he's not going to come out and say, but you guys have to start reading in between the lines. And that's exactly why we made the video that dropped on Monday talking about how to protect yourself during this time period and why this is an urgent warning for all investors you have to check out. So make sure you check that out. It's right here for you guys. But if you're still listening, thank you. We appreciate you. Please make sure you like, comment, and subscribe to the channel. Plus hit that little notification bell because we drop
2 videos a week.
And you not want to miss them. Check us out on Monday. But until then, peace.
Peace.
Soundstripe.